There are moments in financial history when the ground shifts beneath our feet, quietly, without headlines, without alarms, without anyone stopping to ask what just happened. And years later, people look back and say, how did we miss the warning? The story begins exactly like that. Not with a crisis, not with a market crash, but with a simple letter most Americans tossed in the trash. A letter that quietly signaled the biggest structural change in our banking system in half a century. And the truth hidden behind it will reshape how your money moves, how it's monitored, and ultimately who controls it. Let's pull back the curtain, because what happened in July 2023 wasn't a service update. It was the silent rewiring of American banking. In July 2023, your bank mailed you a notice, one more envelope buried between credit card ads and grocery coupons. Chances are, you tossed it aside without a second thought. But that letter announced the most important shift in American banking in nearly half a century. Overnight, the very rails your money travels on were replaced, yet the announcement was dressed up like a routine systems upgrade. Think about the mail you usually get from your bank. Account disclosures, new fee schedules, privacy policy reminders. We're conditioned to ignore them because they rarely mean anything meaningful for our day-to-day lives. But that July letter was different. This time, your bank was informing you, quietly, that your account was being moved off the traditional private banking network and onto Federal Reserve infrastructure. Let me show you what truly happened. On July 20, 2023, the Federal Reserve launched something called the FedNow service. This wasn't another payment app or a feature like mobile deposits. FedNow replaced the automated clearinghouse system, the ACH network that had moved money between U.S. banks for half a century. 4 days later, on July 24th, Webster Bank customers received a cheerful letter announcing exciting enhancements to their accounts. And this is where the sleight of hand becomes brilliant. Most of the letter focused on assuring customers what wouldn't change. Your routing number stays the same. Direct deposit still works. Your debit card works everywhere it used to. You can still access 40,000 ATMs through the MoneyPass network. Sounds harmless, right? Nothing to worry about. But the fine print in the attached disclosure told a different story. Your account would no longer settle payments through private bank networks. Every transaction, from your utility bill to your rent payment, would now flow directly through Federal Reserve master accounts. That means the federal government can now view every dollar you spend or receive in real time. We've seen this style of messaging before in American financial history. In August 1971, when President Nixon ended the convertibility of dollars into gold, he went on television and reassured Americans that nothing would change. Paychecks still arrive. Banks still function. Groceries still cost the same. But in reality, everything changed. The dollar shifted from sound money backed by gold to a fiat currency controlled entirely by government policy. Now we're watching a similar pattern unfold, another massive regime change disguised as a simple service improvement. The only difference? This time, banks didn't even pretend to ask for your permission. They notified you after the fact. Here's a question. When was the last time you actually read one of those disclosure letters? Most Americans never do. Banks know this. That's exactly why they used this method to move millions of customers onto Federal Reserve payment rails without public discussion or debate. And the timing wasn't accidental. FedNow wasn't a reaction to any crisis. The Federal Reserve announced the project back in 2019. They spent 4 years building the technology, testing the system, and preparing banks for the migration. This was always the plan. The only missing piece was how to transfer Americans' accounts onto Federal Reserve infrastructure without drawing attention. Those who actually read the July letter noticed a pattern. It highlighted benefits like instant payments and around-the-clock availability. But that wasn't new. Venmo, Zelle, and Cash App had offered instant transfers for years. The real upgrade wasn't speed. It was architecture. Your account stopped being a private banking relationship and became a direct connection to Federal Reserve infrastructure. Now when you pay your electric bill or move money into savings, that transaction no longer settles between two private banks. It settles through the Federal Reserve's master account system. This dramatically changes your financial privacy. Before July 2023, the government needed subpoenas, court orders, or national security letters to access your banking records. Banks acted as intermediaries who could protect customer information or challenge excessive requests. Now the Federal Reserve handles your transactions directly. They don't need to ask permission to monitor your financial activity because they already sit at the center of it. And here's the part most people never saw coming. That letter you ignored didn't just migrate your account onto FedNow. Hidden in the terms and conditions was something even more consequential. You also pre-authorized the next phase of this transition. When the Federal Reserve introduces a central bank digital currency, your FedNow-enabled account automatically becomes a CBDC account. By the time Americans realize what happened, the transition will already be complete. Consent was never requested, only assumed. A nationwide shift toward government-controlled digital money was launched through a mundane banking notice that most customers threw away. The infrastructure is now in place. The path is clear. And millions of Americans have no idea their accounts no longer operate through private banking rails. They're already plugged directly into a Federal Reserve payment network designed for the next era of digital currency oversight. Your bank didn't upgrade your account in July 2023. They transferred it into a federal payment control system. And the next stage is already mapped out. To understand why this matters, we need to break down exactly what changed when your account moved to FedNow. Before FedNow, when you paid your mortgage or sent money to your kid at school, the transaction ran through the ACH system, a slow, batch-based process that often held transfers overnight or through weekends. It wasn't fast, but it offered something important: a buffer. Payments were settled between private banks using their reserves. The Federal Reserve supervised, but wasn't processing individual transactions. Banks had some autonomy over customer payments. FedNow erased that autonomy. Now transactions run 24/7, 365 days a year through Federal Reserve infrastructure. Every dollar you send settles instantly and permanently inside Federal Reserve master accounts. Whether you're splitting a restaurant bill, paying rent, or moving money to savings, the Fed processes it in real time. And that's where the privacy implications deepen. Before FedNow, the government needed legal procedures to access your bank records. Now they see every transaction as it happens because the Fed is literally processing it. No subpoenas required. No third-party protections. But the truth becomes even more striking when you understand what FedNow was built to support. This wasn't about consumer convenience. We already had instant payment apps. FedNow was designed to prepare the U.S. financial system for central bank digital currency. Its features match CBDC requirements perfectly. Real-time settlement, direct government processing, centralized control, irrevocable transactions, infrastructure-level visibility of financial activity, and note the timing. Announced in 2019. Launched in 2023. That 4-year gap wasn't technological hesitation. It was preparation, ensuring that when a U.S. digital currency finally rolls out, the infrastructure to distribute, track, and enforce it will already be woven into the banking system. Your account migration in July 2023 wasn't an update. It was phase 1. Here's how the rollout actually unfolded. When FedNow went live on July 20, 2023, only 35 institutions joined on day 1. That small number made it look like a cautious pilot, something banks could opt into at their own pace. But that was only the surface. Beneath it, the architecture was designed for rapid, unavoidable adoption through correspondent banking. Once the big correspondent banks connected, every smaller bank relying on them for payment processing was automatically pulled into the network. They didn't get a choice, they were hardwired in. Webster Bank is the perfect illustration. They outsourced payment processing to Fiserv. Fiserv became an early FedNow partner. And through Fiserv's MoneyPass network, more than 2,000 financial institutions suddenly found themselves connected to the Federal Reserve's new infrastructure. So what looked like thousands of independent decisions was actually a synchronized, nationwide migration. That's why the Webster letter hyped up MoneyPass benefits: 40,000 ATMs, easier access, broader convenience. But MoneyPass wasn't just an ATM perk. It was the digital bridge linking community banks directly to Federal Reserve rails. They distracted you with ATM access while quietly moving your account into a government-run payment pipeline. And then there's FedNow's most underappreciated feature: irrevocability. Once a FedNow payment goes through, it's final. No clawbacks. No chargebacks. No ACH-style reversals. Why would the Federal Reserve build a system with no way to undo transactions? Because irreversibility gives the government a level of control private banks never allowed. If authorities freeze an account, seize funds, or redirect payments under emergency powers, those actions can't be undone. Under the old system, banks could push back. Now the settlement is instant and definitive. But the most transformative capability is this: FedNow allows the Federal Reserve to deposit digital dollars directly into your account without going through banks at all. This is the foundation for central bank digital currency. When CBDC launches, the Fed won't need JP Morgan or Wells Fargo to distribute anything. They already have a direct pipeline to your bank account through FedNow. This fundamentally changes the relationship between citizens and the financial system. For over a century, banks acted as a buffer, an intermediary that could challenge improper requests, slow down overreach, or maintain some distance between government and personal finances. FedNow erases that buffer. Your account is no longer just a private banking service, it's effectively a node on the Federal Reserve's network. The architecture itself, not the app on your phone, now gives the government the ability to monitor, restrict, or shape your spending in real time. They didn't build it into your account features. They built it into the digital rails underneath your money. Most Americans had no idea that the July 2023 disclosure letters they ignored contained legal language authorizing this shift. Hidden within phrases like enhanced services and digital payment innovations were clauses that quietly pre-approved CBDC migration. When CBDC launches, likely between 2026 and 2027, FedNow-enabled accounts will automatically convert into CBDC wallets. Banks will send another letter celebrating new digital benefits. But the structural change already occurred in 2023. This wasn't an upgrade. It was a redesign. The plan began in 2019, went live in 2023, and was completed before the public even understood what FedNow was. The highway to CBDC is now fully built. By accepting the terms in that unread letter, Americans unknowingly approved the next stage of the transition, one that dismantles financial privacy and opens the door to programmable money. Now that the FedNow architecture is in place, we need to ask the real question. Why was this transformation necessary and what comes next? Because the Federal Reserve did not create FedNow to compete with Cash App or speed up direct deposits. Private companies already solved those problems. The real goal was to create a direct link between the government and every citizen's money, eliminating the role of banks as intermediaries. And the timeline they're following is remarkably clear. 2023, FedNow launches and account migration quietly begins. 2024-2025. Adoption spreads rapidly through correspondent banking networks, pulling thousands of institutions into the ecosystem. 2025-2026. The Fed begins CBDC pilot programs, likely starting with government employees and contractors. 2026-2027. Commercial rollout begins, promoted as the next evolution of the digital convenience you're already used to under FedNow. 2027-2028. Large transactions begin requiring CBDC. Private payment systems and traditional digital money lose ground or face restrictions. And this is where programmable money becomes real. CBDC isn't just a digital dollar, it's a dollar with code. The Federal Reserve could embed spending rules directly into your wallet. Money that expires if unused. Funds restricted to certain stores or regions. Purchases blocked if they fall into unapproved categories. Savings automatically redirected during national emergencies. Think about your everyday decisions. Want to drive across state lines for a vacation? Buy a firearm? Donate to a political cause? Purchase foods labeled unhealthy? Today you can still use cash or private banking to maintain some privacy. Under CBDC, every transaction becomes data, tracked, classified, approved, or denied by code you cannot override. We already saw test versions of these controls during the COVID era. Stimulus payments with expiration dates, rental aid that could only be spent on specific categories. CBDC simply makes those mechanisms permanent. So why did private banks go along with all of this? Because they had no choice. The Federal Reserve made infrastructure modernization a prerequisite for continued access to Fed services. Any bank that refused FedNow adoption would eventually lose the ability to operate. This wasn't innovation. It was regulatory coercion dressed up as a voluntary upgrade. FedNow serves as the proving ground for every technical function CBDC needs. Instant settlement, irrevocable transfers, centralized processing, 24/7 availability. Master account level control. Now comes the part that should concern every American. The exit door is almost closed. Today you can still move money between banks, use cash for privacy, or rely on private payment apps. Once CBDC becomes mandatory, those options disappear. All money becomes traceable, programmable, and permissioned. You won't be transferring dollars, you'll be requesting authorization. Cash elimination will accelerate. It will be framed as outdated, inconvenient, or unsafe. Businesses will gradually stop accepting it. Banks will charge for handling it. Even if cash remains legal, it becomes unusable. And this strategy has worked perfectly so far. Nearly 95% of customers never read the July 2023 disclosures. Of those who did, most couldn't decipher the technical language. The ATM perks and digital features marketing distracted from the structural shift. By the time people realize their accounts now sit on Federal Reserve rails designed for CBDC, the transition will be irreversible. Alternative payment methods? Gone. Discouraged or disabled. Private banking? Absorbed into federal infrastructure. Here's the timeline of the control system they've built. 2019. The plan is announced with FedNow development. 2023. The infrastructure launches and accounts migrate. 2026. CBDC pilots begin. 2028. Traditional money becomes functionally obsolete. 2030. Full digital currency control is active across the economy. Under this system, individuals lose financial autonomy. Every dollar you spend becomes subject to government code rather than personal choice. Prohibited purchases? Blocked. Restricted travel? Denied. Savings limits? Enforced. Unapproved donations? Prevented. The most unsettling part is how all of this happened, with no national debate, no congressional vote, and no meaningful public awareness. Americans didn't choose FedNow. They weren't asked to approve CBDC. The Federal Reserve simply built the infrastructure, migrated accounts, and prepared the transition behind a veil of routine banking paperwork. Your account didn't simply change in July 2023. It became part of a government-controlled payment system. The infrastructure is complete. The legal authorization is baked in. The timeline is active. Americans shifted from private banking to Federal Reserve rails without even realizing it. The foundation for programmable, controllable digital money was laid quietly, while we were distracted by promises of convenience and speed. And the next phase won't require your permission. You already gave it in July 2023.